Everyone, welcome to Tuesday, and like we do every Tuesday, we jump across and have a look at the main board of the NZSX50 to see how it's been tracking. Just that little bit of housekeeping that this is for educational purposes only. No way is it intended to be personalised advice for anyone's personal circumstances. You do need to go and talk to your own advisor for that. Right, let's jump across. Okay, so here I have got the NZSX50 up. It's the main board. I'm recording this on Tuesday morning, so the market is already open, and you can see that it's up about $16.70 already, although our little candle over here is indicating otherwise. So looking at the performance of last week, naturally it did open where it closed the previous week. We did have a bit of a down week. However, that sort of is not surprising. What happens when a market sort of breaks through and does reach a new high, which is most we've seen in the last 2 years? Quite often we will see a little bit of sell-off, and that's because sometimes you'll see investors going, oh my gosh, I've finally got my money back, or I want to realise some profit, and they will actually sell. And that is what has happened last week. To me, it's still fine. The reason being is when I look at that red candle, you can see the bottom wick or the tail. That still indicates that there is more buying pressure in there. And if you look down the bottom, when we look at the volume, there's very little volume on this, okay? And if I just hover over there, it says there was about $108 million worth of shares traded, whereas in the previous week, if I hover on there, there was about 133 million, okay? So another, 20 plus million traded the week prior to last week, so to me it's not concerning at all. Let's just jump across to the 5-year chart and just have a look. So like I've said before, back in January 2021 was where the NZSX50 did reach their all-time high. So we are still off that, but we're not too far away. We're about 1,000 points off where we were in that highs. So it's not surprising that the market does have that little bit of resistance that we saw last week. We'll put our moving averages on just to get an idea. And for those that follow me regularly, I like to use the 30 exponential, and we'll also pop on the 15-week as well. Nothing magic with these numbers. These are just the ones that I use, and you can use any really, as long as it suits your needs. And be consistent with it. That's the biggest thing that I can say. So you can see here that the 15-week moving average is still trading above the 30. That's a good positive sign. You can also see that sometimes the shares will trade down and they will just come back a little bit to those moving averages. So again, it's sort of not surprising that this has happened, because we've had quite a strong run from obviously October last year until sort of around January this year. We did have a good little rally. Then we went through a bit of a sideways pattern, and now we're sort of going through a bit of a rally again. So whether that 12,700 point level is going to be a sign of resistance, it could be, and we could see it hitting that mark a little bit more before it goes through, who knows, or it could obviously happen the other way. But at this stage, all the indicators to me are certainly showing that there's a lot more buying pressure in the New Zealand market than selling. If I just look down here to the MACD, I don't tend to spend a lot of time on it. The only thing I will look at, which you can see here, again, we've got the moving averages on there. So we've got the 15 and 30, and then just a 10-point period. So it's over a 10-week trading period. And that is still looking like the market is wanting to trade up, which to me is a really good sign. Okay, it's not saying something opposite to what we're seeing on the charts. It's in favour with what's happening on the charts. And the only other one I've got down the bottom here is the RSI, the relative strength indicator. It's sitting at about a 66-point level. It still looks as though it could be facing up, which again is a good positive sign. I'll just change this to the daily just to get another idea. And yeah, so we have got that line of resistance there at around that 12,700. We've had obviously about 4 days last week where the market did sell off. Then we had a bit of a rebound again, and this is where we're at today. So it is up, but obviously not quite as high as what the highs were yesterday. So for me, I'm quite comfortable with the market. Certainly just keeping an eye out for opportunities. I upon saying that, with looking at opportunities, there is not a lot of buying that I'm seeing at this stage. The market really is being driven by a handful of stocks. You're probably looking at about 8 to 10 stocks in the New Zealand market. So it's not what we refer to as a broad participation. So you're not seeing the majority of the New Zealand market performing strongly. It's just held up by a few shares. Some are performing extremely well. So if you follow my regular trading signal service, you will see that we were kicked out of A2 Milk last week. They, for some reason, had quite a big drop. Could be on the back of what's happening with Synlait. Who knows? I'm not into the fundamentals. I'm purely looking at the technical aspect, being the charts. And Fisher and Paykel Healthcare is another one that came up with another buy signal for me last week. So if you subscribe to that, that's great. You'll be getting those trading signals if you haven't seen them already. But I'll just stop sharing. So, hey, appreciate your comments. Come back on Thursday. I've had a really interesting request, and that is to look at the correlation between the New Zealand dollar and the US dollar versus how it affects our share market. So come back then and we'll take a look.